Good afternoon, traders. Welcome to TradeSetup and the live stream for, what are we at, the 12th of December, a couple of days closer to Christmas. Hope you all had a good weekend, enjoyable weekend. Um, all right, let's just discuss what we're going to look at today. All right, selling to take advantage of, well, sorry, that was a bit of a note there. We're short selling and the seller's top stocks to target. We're going to discuss today short selling. Is it taboo? I know a few. Um, Especially in the past, I think it's been a bit of a taboo subject, taboo topic, short selling, but it's it's a massive part of trading, and it's not just in stocks; it's across the board. You know, you do FX, or foreign exchange, futures. It's been around for a long, long time. It probably has in stocks obviously too through CFDs and other bits and pieces. You can trade options, you can short sell with options. Uh, but we just want to discuss what it is and what you're looking at doing. Sometimes it's hard for people to get, especially people are new to trading, hard to get their head around, short selling. How do you make money out of short selling? What are the basic mechanisms behind short selling? We'll have a bit of a chat about that. I'm not a master on all the intricacies of it, but I definitely know about selling and short selling and jumping into the market, trying to take advantage of the move down. Um, let's just have a bit of a recap of the market to kick off with. Another good night in the US on Friday night. They had I think they closed at all-time highs again, so they're just making new highs. And I think it was the first week for the last, I don't know how long, but it's been quite a while where it's been a positive day each session in the US. So it's five straight sessions in a row. It's just been going up into new highs, making new record highs. So it's all good over there in the US at the moment, and that's dragging us higher, obviously. Um, we'll take a look now. So just before we kick off, just remember we've got our on the screen. What you can see is our general advice warning. It's not, we don't obviously give personal advice, just straight out general advice. You can see the disclaimer on there. And also, if you're new to looking at this or looking at this for the first time, the stream, please just join us on Twitter and go to Facebook. We're also on LinkedIn as well. You better find us on there. Or just subscribe on the YouTube channel as well. And that way you'll get YouTube alerts when we actually go live and we start streaming. All right, let's just jump into it. Let's take a look at the overall market. Let's just take a look at the ASX. So, right, just to start, we are up 20 at the moment. So we've been hovering around 15 to 20 up most of the session. Opened up, or the actual futures washed out to the downside as they do. And then the ASX actually opened up about, I think it was up 20 on the open and sort of been bouncing around there. You should see the intraday price action at the moment. Yeah, so you can see it's opened up sort of around that 55.80 and just been oscillating about there. It could Look, it could be building higher lows. That's on a 1 minute time frame. Just go to 5 minute. You can see that's just continuing that trend higher from pretty much Monday. Monday it opened lower and just built that base and hasn't looked back since. So whether we just break out to the top side later on this afternoon, we'll see how that goes. But you can see that 1 minute price action just sort of oscillating around 55.80. If we hold some higher lows going to the close, we may just pop up to the top side. Pop out some of this 55, 83, 84 zone, wash that out, and just head higher into the close. We'll see how that goes. Let's just look at the price action on the CFD. All right, so that's the 30-minute chart there we've been looking at for quite a while. Obviously, the key level at the moment is that, say, 55.40. That's your key level. Now, if that breaks, you'd expect to see some sellers coming in, maybe a major correction of this leg from 53.83, correction of that leg up. If we just drill it back, you can see we've had that correction lower, held that 53.83 zone, built that higher low on the longer term basis, and then just worked our way higher. And we're heading up towards that 5,600 mark at the moment. Both this is the CFD, but obviously on the ASX as well, XJO. We've been speaking about this for a while. We could just grind higher into Christmas. We've got another couple of weeks to go. We could take out that quite easily, 5,600, and then head higher from there. If we just go back to just look at daily, click over to daily here. You can see, but that price structure is really good. You can see this uptrend was broken with this big move down. It looked like it was going to go lower with this major lower high, but really that's the anchor to the uptrend we've been looking at for a long time now. We've discussed this previously. That was this level here, 50.50. was anchoring that move up. We did contract down to it, actually touched it and rejected pretty strong off that level. And then we've headed higher since with the US, all the positivity in the US, the Trump rally just taking us high. So it looks pretty much certain that we're going to hit that 5,600 soon. What are we now? About 20 to 30 points off, 20 points off there. We could easily wash that level out and then retrace from there. That may take a bit of time, a couple of weeks or so. But a few days we could be up there quite easily, even later on today or tomorrow, if the way the market's going. So it's all looking good to take out that. So that's a major high-low build, and that could take us straight through. Let's take a look at the Aussie. The Aussie we've discussed for a while. We've had that. Just go back a bit more. That major move lower from, I think it's 77.50. Well, the data's not loaded yet. Okay, 77.50 had a big push lower, and at the moment we're sort of contracting higher just of that leg down, but we're holding higher lows. It's looking quite good at the moment. The key level really at the moment is at 7,500. So if we hold that zone, we're sort of pushing up into it, but that's still the key level. We haven't broken through it convincingly. We are holding some higher lows. We've got one at 74, say 20, 15 to 20. Another around that 74.35. That could build the base just to push back up and through that 7,500 zone, and then we just contract a bit higher, or whether it starts a new leg up and we retrace quite a bit. Let's just look at a daily on that one. I haven't looked at it for a while. Anyone trading the currencies or do trade the currencies? If so, your views on the Aussie, you can see that we had a major move down. It's sort of been at 95, even just say give or take 95. We've had that big leg down, and we spent a lot of time down. It was probably right through 2016, really. Haven't made a new low. We're sort of holding 78.20 and that 77.50 at the moment. That zone in there could produce that lower high, and that could take us, down and through 73.10 mark on a daily basis. So we could be looking at spend a lot of time building that, but building a lower high at that 77.50. We washed it out with that move up, and we corrected off there. So whether we just in the midst on a daily basis, holding that 75 zone and then rolling over from here and testing down towards 71.50 or thereabouts. So could potentially be a big move on the cards if we do. Actually, if we just measure that, let's just take a quick look at that. I'll use this color. That leg down there, if we are to get that higher low, lower high, in fact, is that 75. Even if it contracts a bit higher and then rolls over from there, we could get a major wash out of that and then bang straight down. But definitely that trend on the daily is lower. That could take us down and through 71.50 quite easily, even down to 70.50, another 100 pips on that. So it could be a big move on the cards on the Aussie, but we'll just have to see how it goes, obviously. Or is this, this is a major leg level here, 71.50. Is this going to be a high low here, and we just see this market contracting over a longer period of time and then pushing back up? We'll have to see. And even a major longer term squeeze of that move down. There would have been a lot of shorts built up in here as well. We could just squeeze them and pop back up to the top side. So either way, a lot of time is going to take to play that out. Meaning pound and yen. Euro. Yeah, no worries. We'll have a quick look at that before we get into it. It's always good to look at other markets too, just to see what's happening in those. I know the euro's been sort of bouncing around with all the Italy stuff, and obviously dragged around with the US dollar as well. And don't forget, I think we've got the rates in a night or two. The US Fed Reserve is going to announce rate. Everyone's expecting a rate rise, but everyone's going to be watching. I think just looking towards what's happening next year, what they plan for next year. I think this time last year when they raised rates, they were talking about another three or four rate rises for 2016, which hasn't played out. We're going to get one. So whether they have that sort of rhetoric again and talk about that, potentially next year, 2017, be a few more rate rises, and then we just don't get the inflationary figures or the economic data to support another rate rise. But the way it's looking, with Trump and everyone's pointed towards higher inflation, then they're going to have to raise. I mean, if their tone changes from, one of being sort of mild to really having to clamp down, and especially if they get inflationary figures, they might be a bit faster than expected. So really, everyone will be looking towards what they say at the minutes of the meeting. The euro. Now, the way we look at the euro is obviously it had a big move down. You can see that. It's pretty clear as a bell, really. Contraction higher, and we've got a really just a resistance level across here, and anchor to this major trend down. That's that 114 mark. So yeah, say give or take 114. You can see that that leg's held down. It's way up at 140. I mean, that's miles away, but at the moment we're really button up against 115.50, say, and we just bounce and we spend a lot of time. What is it? Good on 2 years at the moment. That was back at the start of 2015, and we found support at around that 104.80. Okay, so longer term, we're sort of down towards that support zone, and the MAs are rolling down. So what we look for is it is, it's down at support. So for me, I wouldn't just jump in and buy. I'd want to see on a daily basis a higher low build. We have contracted off there, but that's pretty much like this type of price action. You can see a big washout to the top side of that high. It's still holding that trend down. We rolled over from 113.70, roll over down to 108.50, bounce back up towards that 112, say 11300, and we've had another good strong leg down into that support zone. So that's the support since the last couple of years. All right, we have pushed back up, and from here, ideally, what I'd like to see for a buy is, a bit of contraction back up and building that higher low. All right, if I've got any sort of inkling to go along that, or it's just a reverse, a lower high, we may bounce off there. You get that initial reaction. We've had a reaction off there, and it's back in there. So that secondary reaction, it's been sort of touched down there twice already. Secondary reaction up, if we find that sellers take control, we start rolling over from there, because that's a good solid trend lower. If we find that we do get some more sellers step into the market, that could roll over, and that could just at least have a big washout, which could give you 100 or so pips anyway. If we have a washout down to 103.80 even, what's that? It's 150 to 200 pips. Let alone if we come from a high low, it could be 200 pip trade easy on that. Just a big major washout on that daily basis. So yeah, keep an eye on that. On the upside, even if it just corrects and it corrects back up through that high, or we find the market could just contract and you could still get a couple of good trades, but I'll definitely be going down. If we have a look at that, let's go down to an hourly chart just to see if they're showing, because we are getting a bit stretched on the daily, don't forget as well. So that's that move higher. We've come back at that down into that zone. So if we let's start to see, if we can take out that minor lower high on the hourly basis, we could get that push up, and we might get something like that. So a good strong reaction after we pushed down, consolidate a bit, had another go at it, bounced quite hard, and a big washout to the top side, come straight back down to that support as well. But if we start taking out, third time lucky, if that's starting to hold, we start washing out these levels at 115.60, and we may just contract higher. But to me, it looks still like those MAs are caught up to price action at the moment. Normally, you want this type of reaction when it's come down hard, you build a higher low. MAs are really just in no man's land, and then it pops back up, even if it just goes to the other side of the MAs. But at the moment, here from this leg down is a bit, to me, it's more low probability. Like I said, if we can just delete that, that's sort of your key high at the moment. Okay, so we could easily get this top price action back up, contract, and then a bit of consolidation like this could produce a lower high. All right, I hope that makes sense there. But that's a good leg there. So it looks like it's extended. You're into daily support, so you sort of your reasons for selling have got to be pretty good, or you've got to have a nice wide stop. I mean, for me, a stop if I'm selling down here has got to be way up here, even off the half. Probably the half an hour chart's very similar. That hourly trends down, or you could just short it on a breakthrough here. But don't forget, you're down in a support zone, a major support zone. They could easily just wash people out. So I hope you heard that. It looks like I've just dropped out and I'm back again. Yeah, but for me, being in that, it's a more of a low probability trade. I mean, there's nothing to say it can't roll over from here. We might miss it, but I'd rather see that contract a bit, build a major lower high, below this one, especially after this top price action, it's pushed down, it's pushed straight back in. If you can build that lower high and start rolling over, you might get a trade off. Even if it holds up, it holds up back into support, you still got something potentially for 106.70. Even if it's down to 105.70, it's 100 pips, and you can have a lot less than that 20 pip risk. So I'd be looking for something like that where maybe it bounces off and then you start seeing sellers that are coming back in. They're coming back in at lower prices. So that's the way I'd like to attack that short anyway. All right, before we get too sidetracked, does that make sense there, Michael? Before we jump into the talking about selling, well, actually, not a bad topic to lead into it. Short selling. All right, so let's get into it then. So the topic that we want to just discuss today, and I think it was brought up. Paul might have brought something up a couple of days ago, or a couple of sessions ago, about short selling. Is it being banned? It's not been banned. There was, I don't know, through the GFC, it might have been anytime there's market capitulation, and I'm not talking just a couple of days, but like the GFC, they just banned short selling, and that was anything, even on options. CFDs were taken off the board purely because it's just when there's just complete fear like that. They just don't. You don't want to see stocks get hammered, and especially banks. I think Devin and I were discussing Macquarie Bank that got hammered. I think it was over that period, and just short sellers were just anyone was hammering that really, hammering that stock, and it's not the only one that was getting gaining at that time. There was just you straight out anyone's holding long stock positions may have been selling. Then you've got that exacerbation of trading with options, through CFDs, through other products. I guess short selling through there. So they just banned that just to ease off the short selling, and then buyers eventually, bargain hunters might be stepping in just to cool that market off when it was really, in a bit of a frenzy. So that, I mean, you can still short sell without a problem through CFDs. Obviously, it's different. It comes down to whether if there's a stock that you like as a sell, whether it's available as a CFD. You can still trade through options. You can effectively sell the market through options. If you want to buy a put, you can still, on stocks anyway, you can still attack it that way. Now, for the people that don't sort of understand or are maybe finding it hard to get their head around what short selling is, it's easy to understand. Okay, if you buy, how are you going to make money? If you're buying a stock, you want it to appreciate. All right. Now, if you can get your head around that, it's like buying a car. Well, buying a house. Let's talk about that. That's what I'm doing at the moment. Trying to look to selling mine anyway. Buying a house, you want the prices to go up. Now, if you can actually, you can't short sell property. Well, there might be a mechanism or a way to do it, but effectively, if you're short selling the market, you're trying to take advantage of whether it's fundamental advantage or a technical advantage of the market heading south. All right. So in this respect, we just look at the euro. So if I believe this becomes a lower high, and I just want to short sell that. I mean, I also want to do is sell it if it breaks through, say, this zone here. I want to sell. I don't have to own it previously, as in stocks. It's probably easier to get your head around with foreign exchange, futures, other big. This is a massive market, foreign exchange, obviously. So selling is readily done as buying, all right? Whereas stocks, it's not. All right. So if I'm happy to make a profit, I think that this market's going to go down. I want to sell it at say 106.65, and I'm happy to take it off if it goes down to 105.65. What was that? 65.65? Yeah, 100 pips. Or if it just keeps going down, I don't know. But I'm going to profit from that move lower. All right. So if we're talking stocks, let's just get a chart up here. I've got one. Whether it's fundamental, like I just mentioned before, if you fundamentally think, say this stock SYD is overbought, it's a bit overvalued, it's not fair value at this level. So you can just jump in if you think, I'll say, well, at this zone here, I think it's getting a bit overstretched. I think that the valuation of that stock is a bit high, and if I don't own it at all, and I think there's a potential move down, I want to sell it. whether you just jump in and sell because it's overbought, fundamentally, you got to obviously have your risk. You got to have your risk, or you got to know where your risk is, I guess. Risk is when you're wrong. Obviously, it pops back up through the highs and keeps going into new highs. But if I think this is overvalued, I think there's a good chance for this to move down. At least it's got down to support. Let's just draw that up. Got down to support at the moment. But at that stage, if I thought that was overcooked, I want to short sell. I'll just sell. I can sell that through CFDs if I can find some CFDs to sell. I can potentially sell it through options. I could have a short position, take advantage of a move down through options. Just trying to think. You can't directly go in and sell stock itself, though. It's got to be obviously through those other mechanisms that we just discussed. Uh, Generally, the biggest thing nowadays is obviously CFDs. So I'm just trying to take advantage of that move down. If it was a technical, I'm looking for a technical edge there. Potentially, I would have been looking for a break just on this one as an example. Maybe a breakthrough there because I know that that's sort of the current move up. It's contracted lower. It's had that little leg up. It's struggling with that lower high. It's double top lower high. Even you could have sold it short through here. That would have been a target initially. It broke down and then you got that lower high. Just in here, you could have sold it through here. I know where my risk is, just above here. So if I get it right, which I did in hindsight, it's headed south. I might have a target down here. It's the same. For me, I view short selling exactly the same as going long, as buying. You're selling into the market trying to profit from a move lower. Buying, you're just trying to do the opposite, trying to profit from a move higher. Now, is it taboo? I know a lot of people, and it's been in the past. We're talking about CFDs. It was a bit short selling is a bit taboo. It's maybe those nasty people trying to take advantage and trying to sell the market down and trying to hit it hard to get those prices lower. Who knows? But I mean, if there's a fundamental reason for it, it could be you might be able to take advantage, and then you get the market stretched. You might get people that are going long that are just selling to exit, so you get that increased selling pressure, pushing the market down. But in my view, I don't believe it's taboo. I just think it's another opportunity. This could be a fundamentally sound stock as well. I mean, it could be still undervalued there. Say it was, looking at the flip side of it, I don't know what they're doing, SYD, SID, but this stock itself, just say we're not looking at that. Well, let's just do it. It's a bit different. Say the support is, you got support through here. All right, so fundamentally, it might just be stretched, but fundamentally, it still could be good. Yeah, so don't forget that. That's just a key point where that's why I know Davin's the same. Doesn't think it's taboo because you can short sell it. Sooner or later, you have to buy it back. So there's going to be coming buyer pressure. So it's just the reverse. If you couldn't short sell this through a CFD at all, and it was just buying, and then people just taking advantage, to sell it to book a profit, and then they want to re-enter and buy again. So it's just purely people opening a long position and then selling to close it, and then opening a long position. If that's the case, it's a very similar scenario. It's just that there may not be extra pressure on the downside from new sellers, taking a short position. But effectively, I guess you can view anything as a neutral game. For every buyer, there's a seller. Um, so if I'm selling, there's got to be a buyer up here, and I'm just taking. If I get it right, I win. He loses. If he gets it right, I lose. It's as simple as that, and that's the case for pretty much any market. So back to this, if this is a fundamentally sound stock, it looks great. It's still undervalued, even at these prices. I could still take advantage of just a pure technical trade. I think if this breaks down, I think, okay, we've got our entry here. It's got a double top. It's looking a bit stretched at that stage. For whatever reason, I want to sell it. I might think it's getting a bit ahead of itself up here. It might be starting to look a bit stretched to me. Fundamentally, it'll still be great. It's just running out of sellers, and I can see that through my technicals probably. Because the price is getting a bit overcooked, but I know that they're probably going to step in at some stage again because it's still a great stock. So I could easily just take advantage of that correction lower. But I've got to be aware that at some stages, because it's such a good stock, fundamentally it could just take off again. And I don't want to be involved, thinking that short selling is generally a hard and fast type of trading. Not hard and fast in that respect, but you can sit there and hold a stock because it's got unlimited upside when you're buying it, and it could just grind its way higher. But selling, it's got limited. it can only go to zero. Any stock can only go to zero. So sometimes they can just fall hard, and you just got to be wary of that. You got to know your levels. You got to understand what your plan ahead of time is, and then just sell into that and know what your targets may be. And are you going against a fundamentally strong stock, and you're just looking for that little retracement to take advantage of? Maybe it's a bit of scalping. Maybe it's a couple of day move. It could be a weekly move. You don't know. However you're viewing it, but you've got to have in the back of your head what you're going against. Or is this stock just completely capitulating? I can't remember what the one before was. We had it a long time ago. The reject shop. If I can just go back. Um, See, that doesn't look too, at that stage, it didn't look too bad. And they got hammered just after it got through those highs. Now, if you go back to monthly, that on a monthly, that doesn't look good at all. Especially you've got a major double top. It's taken out this base through $9. And then just remember in the back of your head on a monthly basis, this is a bit different to something just retracing when the opportunity is still, buyers are still happy to step in, it's trending higher, and you're just trying to take advantage of a short-term move lower. This, on the other hand, could be something completely different. It's not so much a short-term move lower. This could be just complete, and we saw that. Once it got through here, you traded through it, you shorted on a lower high, you could still be holding that because you think on the monthly basis, this could be a lower high. It's washed out the highs. There's a lot of good things, setting up. It could easily be targeting $5 and lower. Does that make sense to everyone? Just that slight difference on and why you're entering the trade, but you've got to know why you're entering a short sell prior to that, because sometimes it can turn a reverse on you quite hard. That makes sense. I just have a sip of my coffee. So if we just go to, so now, I guess we've just gone over quickly over short selling and trying to sell, taking advantage of that price move. You've got to have in your head of why. Is it a long-term move down like we just showed in TRS? Is there a possibility of this thing just to drop like a stone and we want to get involved? Or is it just like potentially this one here? It's going high, it's getting a bit stretched. We just want to, maybe we see that as a good little short selling opportunity just to take maybe a 2-to-1 risk reward trade. We know what our risk is because we can see it off the highs, or we've got this lower high in here, it's built, we can trade through there, whatever your reasons are, but just having a plan of attack. Now let's go take a look at sometimes it just doesn't play out that way. You've just got to be careful with short selling. It can get a bit dicey because I guess stocks are built to go up. They're made to go up. They can only go to zero. And the mindset of stock traders is probably a bit different to foreign exchange traders, futures traders. I guess markets that have been readily shortable for a long time. And that's, they're based, there's just as many sellers as buyers in there. There's always people jumping in and selling the futures for whatever reason. But stocks, generally, it's a sort of a buy and hold nature. But in saying that, I don't want to get too far ahead of myself, but I think stocks have got to be traded more through the GFC. I think a lot of people were caught, and this may be me getting a bit off topic and just discussing the benefits of short selling or being able to trade a stock. I guess a lot of people buy and hold. You had that big run up into 2007. Was it 5-year, 6-year bull market? Did quite well. Everyone was doing. That's probably before I come into the market around 2001 or two. It started kicking off. So I only had, before the GFC, I only had eyes for a bull market. So seeing that come in, it probably opened my eyes to being able to trade a market and just to realizing, always having in the back of your head, not so much a buy and hold mentality, but trading it. If the market does look like it's, understanding price structure too. Once you understand price structure, it's not that buy and hold mentality, but more of a trading mentality. Then it opens up opportunities to shorting as well. Does that make sense there? What I'm trying to say, but back before the GFC, it was probably a bit of a buy and hold mentality. Hold it, even through the GFC, it's going to come back. But there's a lot of stocks that just haven't. The ASX itself hasn't come near to that. I think it was 64 highs. It's got above 6,000 recently, and we could be targeting that, but we've been below that all-time highs in the ASX for a long time now. Whereas the S&P's gone, the DAX has made new highs since. A lot of other markets have. So if you had that sort of buy and hold mentality back then, you could still be behind the 8 ball depending on what you traded. But if you had more of a trading mentality and understanding price structure, there would have been a lot of cues technically to get out. even fundamentally, just to get out. And then there could have been opportunities open up on the short side if that, something you were looking at, even to hedge positions. You selling it, and for me, buying and selling the same thing is just a different type. It's the reverse setup. So what we've just discussed through here of reasons to sell um, is the reverse of what we've discussed many times to buy. So just trying to take advantage of that. Now I tend to get sidetracked a lot, guys, but we'll just go over the stocks that are the top, was it 5 at the moment that are listed by the ASX. You can go see the highest open interest on shorting percentage of stocks that are held short. The highest, or the 5 highest listed by ASIC, ASX. The first one is Maya. Now, this is something we're going to discuss tomorrow, short squeezes. So if we go back, the monthly doesn't talk to you too much. The weekly chart, we can say that trend has been down. It's had, it's popped up here. It's had a good leg down. We popped up to $3, had another good leg down. And I think whether people are holding longer term shorts or, we're just starting to dive in and go short now, you don't know. That's the biggest thing. But this is listed as the highest. It's around 16 to 17%, I think, shorts of sellers. And if you ask me how they work it out, I couldn't tell you, to be honest. I'm just trying to think. Anyway, these are the top 5 stocks. Maya's on the list now. If I just looked at that prior to doing the stream, and that looks like there's a bit of a short squeeze going on. That was really just kicked off today. Whether people have shorted, they've seen this rollover, this big move down, and then it's popped up here to around that 125 to 27 mark, and it's just whether it's just increased in the last week or two. Shorts have just jumped in, where now I think they're just being squeezed out of the market. And squeezed out, we mean that the market's going out, so sooner or later that anyone's short. And remembering, when you're a seller, you've really got to have a hard stop in there, or you've got to have it an exact spot where you want to get out. You can't just, I guess, buy and hold in reverse. You've got to have an idea of where you want to get out. So a lot of these times, short sellers can be squeezed, and it's notorious. Markets are notorious for doing it. It's not just stocks, it's FX, futures. They do it all the time. Bring in some short sellers for whatever reason, and they squeeze them back out when it pops back up, knowing that they've got to have probably a stop around 130, for instance, if you're shorting it in here. That's the top one. If we go to Western areas, there's another one there. For me, potentially, these are the top held stocks that are shorting. I wouldn't short this up here. You're seeing the market potentially building that higher low, major high low at 230. If you're going to short in here, I can't see any reason why to just at the moment, apart from that little washout of 320. I still haven't seen. I think once it gets through 290, I think we'll see more confirmation that maybe it's worth jumping in and selling it. But that's the second one on the list. We got ACONX, ACX, I think ACX. Yep, this one's a bit clearer to me of why you'd probably jump in and sell it. We can see that that's had a bit of a correction down to $4. It's worked its way higher, $3.825, $3.850, and we can see that what is it? Last few months, probably 4, 5, 6 months, it's been heading south, and you can see that it's quite clear with lower highs. So that, to me, rather than the other two, rather than Maya and Western areas, is a bit clearer in a short sell. So you know where your risk is going to be. I'm just trying to think. For example, just in this high, if we can draw that up, just quickly chart that. Trying to take advantage of a move lower. All right, so that's a bit clearer than the other two. If just get that chart snap there. So with short selling, if you can just keep in the back of your head or in your mind that you're trying to look for the same type of setups, you're not trying to just sell into it because you think it's overbought. If fundamentally it's saying it's getting stretched, it's not, the valuation is a bit lower, it shouldn't be up at these levels. For there, I'd like to look for an entry on, and whereas for a long position, we want to look for that higher low to build. For shorts, we might say it's just capitulating down here. We want to see that, or even in here, evidence of a major lower high. So really, what you're looking for with buy is the reverse for shorts. Does that make sense there? So I would always, I would attack it exactly the same way, but I definitely want to know where my targets are, and I would definitely probably move my risk tighter a bit quicker because of the nature of short selling and the nature of that. Whether it's, as the two charts we showed before, one on was it the reject shop, attacking that with you know what your overall plan is. You've got it. This thing has got the potential to really capitulate, and there could be a good trade in it, as opposed to that City example we just mentioned before. Um, is it just a contraction? So you've got to have it in the back of your mind. So you've got to attack it. Probably, I'd be a bit more not aggressive, I'd say, but just a bit more tighter on my risk for short selling. But in this respect, if we're looking for this type of setup, we can see it through here. You've got the longer term trend down, it's capitulating a bit. Not capitulating, I guess not that word, but the market's made a high. You've got the lower high in here, and we're looking at this zone. So we've moved down, we've washed out some of these anchor levels to the trend up. We're starting to show failure. So in here, if it was going to go, if I expected this market to continue high, it's got to take out to the top side. So I want to look for an entry, but at the moment, if I'm looking for an entry short, get back a picture, prime entry through here. So just when it broke down those lows, this is a major lower high. You've got another little lower high after a washout. So there's a lot of key factors. First target, I'd be just down here, say at that 560. You've probably got 1.5 to 1 at that stage, depending on where you want to hold your risk. And ideally, I'd probably hold my risk just up here. You've got it wash out through there. So for me, at this stage, if it bounced off here, this support zone, okay, maybe my trade's over, but it's gone. Gold chart, can you view? Oh, well, no worries, Susan. So where was I? If it bounced off that support, I'd be a bit more aggressive on tightening my stops, just thinking that this thing could easily bounce and build that, this type of structure, a higher low, and then, okay, we've got the next major leg higher. But the fact that it's washed out, I might just follow it and try to trend trade it, or just follow that trend lower, see if we can squeeze a bit more out. And you've got that lower high that's built, even with a retest and a bit of a washout there, after pushing through this low, push through, bounce back up. You didn't really come under any pressure, probably back to a break-even trade, a neutral trade, and then we've had that secondary leg lower, and we're getting some more price action. So if you just follow with your stop, you've got a good little trade happening there. So you can see that shorts can be just as profitable as long sometimes, but I think you've got to be a bit more active on them. You just got to trade them, and you've got to know what you're looking for, I guess, and just be a bit more aggressive on those. So if we go back to our list, we've got Aconex was the second one. What do we got? 9. What is A? 9 NEC? 9 Entertainment. That's another highly shorted stock. And you can see that's okay in a weekly. Let's go back to the daily. You can see that's had that push up, taken out the lows, had another retest of those highs. It really just made that major lower high. Then we've been heading south since then. It's looking like, sooner or later it's going to run out of steam and we're going to get buyers happy to step in. So for me, I don't see this as a great shorting opportunity just now. Potentially be looking this as taking out some of these levels at 105 to 110, pushing back up, maybe consolidation, and then look for that major higher low to build for a long position. But this is on the list, and the last one we got is Metcash. Was it MTS? Metcash. And this, just glancing at that, you've got this major overhead sort of consolidation phase through here, and then it's sold off down to $1 from this zone after breaking down through. Actually, we'll draw that up. So we've got, you can see, oh, that's not what I wanted. You can see why it's shorted. All right, so we've got major support through here. We're pushing down with some lower highs, broke down through here, popped back up, made that lower high in here, but you've already just broken down the support zone. So anyone who is long, and we've seen this type of structure through here, and starting to sell down, you'd probably be just wanting to get out just because of what we've seen here. Because otherwise, if it breaks down through here, you'd probably through that 320 zone, you'd probably want to just exit any sort of longs, and that's what we've seen. I think that's what's caused that move down. Where there's short sellers jumping in there, but we've had a big push down. Now we've got that reaction off a dollar, and we push back up. But what we're seeing now, interesting enough, is a bit of resistance starting to show. We've got a key level probably through here. And if we start building that lower high, this could potentially be a nice little short if we can drill down on that a bit closer. This could potentially, I could understand why this is a highly shorted stock as compared to the other few. Say yeah, I don't understand that too much. Western areas, maybe not. 9 again, that's sort of down towards the lows. But if we're looking at this one, there is a bit of potential for this on the short side. So you've got to push through. It's starting to butt its head up against 225. You've had a support zone here. You built that lower high through here. Yeah, this move down has just washed out this support. You've got your anchor. I'd say your anchor is really at 175. But if this zone holds and we start rolling over and we start attacking, two to 205 zone again, then you've potentially got that little washout of that high. If you can see that, I'll just reverse draw it. That washout, you start attacking this zone here. We might push through it. You might pop up, build another lower high. Then I think what you might get is a lot of sellers entering the market. So if you're buying it, putting in context to this overall, let me just get a bit more longer term structure. All right, this is a leg down. We've had that reaction off longer term on a weekly basis as well. We're starting to find a bit of resistance up at 230. We're starting to break some lows at $2. This could potentially be that lower high we're looking for, and then it rolls over. So as you contract your view down, down, down to try to build that entry, this out of the top 5 that we're seeing has got potential to roll over. But you just want to see, again, the last thing I'm looking for is really the entry. And if we're targeting even down to $1, I think there's a lot of fat in that trade, even if it's just $1.80. But again, if that sets up quite nicely and you do get your short entry, I want to be able to assess my risk quite clearly off lower highs, and then just try to tighten up as we go down. If we hit that first, we react off $1.80, so be it. I might lock in a break even, I might lock in a small trade or a small loss. But if we wash that trade, we wash that zone out there, head down to $1.70, that I think this short trade could really be on, and we could be pushing down to these sort of low levels and retesting $1.10, $1.20, that sort of zone. And then there's quite a bit in this trade, but that you can see is a bit different to the others. All right, I'll probably mumble on enough about that short selling. Is anyone active into short selling? Does anyone get involved in it, or we just all generally go along? I mean, when the market's going high, the ASX, as we've seen, is going higher. Sometimes it's just not enough. There's no opportunities, and the solid opportunities are really on the buy side anyway. So, but there are times we've shorted Qantas previously. We've shorted ASX. We've shorted TGR. I've done okay on that, but they haven't been the payoffs as because the market's been quite positive. There hasn't been quite the payoffs in them on the short side as there has been on the long side. So hence that's why pretty much all our portfolio at the moment is on the long side. All right. So any questions on that, guys, before we kick it off? Before we just jump into gold? I'll just get the gold chart up while I'm waiting. And Susan, what is there any particular time frame you just want to have a look at? Yeah, um, it that's what I'm trying to. I guess one thing I didn't point out as well is when you're talking about leverage and things like that. Obviously, if you're just purely been trading stocks in the past, things like that can get obviously complicated. But if you can think of it from a different point of view, um, say for instance you've got a 100 grand portfolio, you divvy that into 10 positions. This is say the way I would I would attack it. So if you're trading pure stock, um, I want 10 grand positions. All right, so I've got my 10 positions, $10,000 I chuck into a stock. If I buy it, I want it to go up, whatever I want to do. So I've got a $10,000 um, nominal exposure. If I'm looking at shorting or even buying as a CFD, forgetting about going long or going short, I could work off that too. I could work off what's my overall exposure I want, $10,000, and then I'm only going to pay a portion of that in the way of margin, and just try to reverse that for the sell side, okay? But then I guess the key difference is sometimes you can get away with not having a hard and fast stop on long positions on buying, but I think you've pretty much, because there's unlimited risk for a seller, whereas there's limited risk, limited downside for a buyer. You've got to have a hard and fast. I think anyway, have a hard stop level. You obviously, when you're looking at your price structure, you're going to have a level. Let's look at gold here, for instance, that just popped up. Um, if I wanted to sell, just for instance, I'm looking at this as contraction higher on the 1 minute chart. If I think that's going to be, let's just quit that. This has just popped up. Maybe it's just washed out this high here. If I want to see, I want risk. I want to define my risk. I just want to trade it off a lower high. All right, so I know exactly what my risk is. I know that's where whether it's just I limit my risk up here, but I've got a hard and fast stop. All right, so because this thing could easily just turn around, if it's a stock, for example, it could turn around and retrace on me, I lose, but I want to know exactly. And then this could be, oh geez, what happened there? This could be that was an interesting little candle. If I'm looking to sell this and it's a stock, I'm going off a lower high. I know exactly where my risk is, and then I'll just manage it on the way down. But if it turns around and retraces on me, I'm going to get stopped out. I'm happy to put a hard stop in there. Whereas sometimes on the buy side, you don't need that as such. But I think definitely with shorting, if you looking at the overall position, say it's a 10 grand position, even with buying CFDs, I want exposure of $10,000. I might pay a 10% of that as margin, so it's $1,000. That's not particularly a risk. Your risk is still off your stop. You might only risk $200. All right, but that's all got to pre-plan. You got to know that prior to you putting on the trade, and it could be you could view it as exactly the same as buying a stock. I want a 10 grand position. I know, forgetting about the margin because you don't need to worry about that. I know I've got a $200 risk on it because I know that would take me below this potentially below a support level. If it breaks through there, I don't want to be in. I know that I'm going to lose $200. I'm happy with that. You just attack it exactly the same way for a CFD. And on the short side, I think if you have that mentality, just flip whatever you view on the buy, flip it over, and just have that same sort of mentality. I know I want $10,000 exposure. I've got my risk. I know where I want to place that. If it breaks down through here, I want to be short. I know where my risk is because I'm working off a lower high. I know that I want to make that risk $200, and you can work all that out prior to the trade. You know how many CFDs you want to do, and then away you go. Does that make sense? Um, so yeah, it sometimes it can get a bit complicated, but yeah, just try to view it from that perspective. You always view it from a risk perspective. All right, let's get on to gold. Now this is a 1 minute chart. It's just popped up. That's quite nice actually. Is that what you want to look at, Susan? A daily, a weekly, an hourly? We'll start off at daily and just work our way down. Yeah, well, that's true, Paul. Um, but that's why I mean I work. If I want to put on a new trade, I just work it out prior. Um, I know where my risk is. I put my hard stops in. I just forget about it. You can easily just forget about it and just see how it goes. Um, and then you can alert your levels where, okay, if it trades that level, I'll send an alert. Go and have a look and see what's happening. Do I have to adjust my stop, raise it for a long position, or drop it to lock in some profit, and then just work it from there. But yeah, if you got 10 positions, it can get a bit harder. But they're not all going to be shorts, or well, they could all be longs at the moment. We've got 10 long ones, or eight long positions at the moment. Yeah. Look, That's exactly true, Paul. At the moment, the market's more conducive to going long. All right, and that's only because the ASX, when we just were talking that prior, um, I wouldn't bother either. I mean, at the moment, if I would go short, go long or short, sometimes, like we had a few shorts on prior, when the market was looking to roll over, and that was purely because the ASX was looking a bit iffy. It was looking like it was going to have a few problems. So whether you want to view that as a hedging tool, just to get some shorts on, so you can hedge your overall portfolio, or you just want to attack the downside because you think there's going to be some downside on the ASX and drill it down to your stocks. Um, I guess that's up to your own personal opinion, but that's the way we viewed it when the market looks like it had potential to roll over. So we looked through and we found a few good short positions, chucked them on. We had a few long positions that did nothing. Some went against us slightly, but they made money on the shorts. We eventually got stopped out of those because the market turned around and we headed higher again. And you can see that reflect in your positions. If you just finding good quality trades, whether it's short or long, if they all happen to turn out to be long, so be it. If the market's going up and it's quite strong like it is at the moment, we don't know where it's going to go. It could just keep ticking away, go through 5,000, 5,600, sorry, and just keep going. Uh, and you find a good short position or maybe a good short setup and a good long setup, I'd always lean towards the long, purely because there might be limited downside. Yeah, I'm looking at that too. I mean, that's what we were just looking at before with Maya. It's heavily shorted, but from technical point of view, don't know why, because it's starting to. It looks like it's getting. If we just click back over that. For me, going back to a monthly, yeah, it's starting to get down on its knees. Down at 80 cents. It could easily roll over from here through a dollar retest, but I think it's had one good reaction, has two strong legs down. Is this the beginning of, we're contracting high for another leg down? I see that as is starting to run out of probability. The probability is starting to turn from a short to a long, just on that one. Whereas the last one we discussed, what was that? Last one was Metcash. It's a bit different scenario. It has corrected high and it's starting to run out of steam on just that leg higher. So you got to understand which way, what you're looking at, I guess. But yeah, on that downside, they're just starting to get squeezed now. I think there's a few short positions starting to get squeezed. We'll actually discuss that tomorrow. We're going to pick up Maya and we're going to look at FMG again tomorrow, just on the downside. All right, let's just click it over to our gold chart again. This is a daily of gold. Yeah, so we see that obviously with this rising US dollar, and I think gold's in a bit of a glut just at the moment because we got US dollars appreciating, maybe rate rises. You might find this turns around on a dime on when they come out the Fed Reserve and starts discussing potential interest rate rises. It's not so much as they're going to be a rate rise this December. That's pretty much factored in, or it is factored in. It's what they're going to talk about and how are they going to be hawkish or what is it, dovish on rates for next year, going into next year. And that's where people will have to start either, adjusting their views, adjusting their opinions. Are they too heavily short in gold and other, too heavily long the US dollar? And if we see a bit of unwinding because they're not as hawkish as what people are expecting, then gold probably would bounce and you get the US dollar selling off. Just locking in some profits from longs and I guess some profits from short side on gold. But in saying all that, we've got some overhead resistance at say 14.15, $1,420. That's through there, and we've even got some other levels as we've pushed lower. We've contracted back into that 1370 zone, and we're heading south here. And we've broken a key level at that 1200. So whether we continue on, and this is a major lower high, or whether we do have to see in gold, because this leg's actually getting quite extended at the moment. You can see that on a daily. We've had that big strong leg down. Is this getting a bit extended? Let's just draw that up. So this leg down, is that getting extended? Do we need to see some contraction off there? But at the moment, the market's still heading south. I mean, there's nothing to say it's going to stop on a daily basis. We probably see more of a key level, I'll say somewhere around here at the moment. Are we seeing that? Just get rid of that. All right, we're seeing a bit of resistance up here. Now, if we start breaking up through 1187, and then we maybe retest or build a higher low, that's where we probably expect this leg down to contract. But at the moment, it's not. We don't know where the bottom is, and it's really this level holding 1186 thereabouts, 1187 on a daily basis. If we drop that down, FinViz 1160 reserve gold. All right, let's just go down a chart there. 60-minute basis, even a tad lower. So that's our leg down on the daily. Even, we've had that contraction higher. We made that lower highs, pushed down, made new lows, contracted higher a bit, and we've got at that level 1187, made new lows. We've contracted higher, and we're just starting to wash out that support at 1157. We've got down to about that 1154. That leg down is still continuing. So really, even on an hourly chart, trend is still lower. Right, we've even got a minor level probably down here at 1160. So if that pops back up through 1160, and then you got one, okay, we've got this leg contracting, or we're just going to contract this leg. If we can just do that. So we've got this current leg down on the 30-minute chart. If we break up through 1160, are we going to contract this? And then does that lead us backwards? Pretty much, are we going to attack this 1180 and back up to 1187? Then if we start attacking that, get through 1180, then maybe it's contraction on a longer term basis. But at the moment, I think there's a few levels we've got to break to really see this this bear market in gold abate or ease. Does that make sense there? All right. Anything else? We're going to have to knock it on the head now. It's been about an hour there. So quickly, any other chart we just want to have a quick look at? Gold, in my views, yeah, like I said, it's got a bit of work to do before I'd be wanting to jump in and buy it. It's still, all accounts, heading south. It's just looking stretch. You can see that on the stochastics. So that probability of that continuing lower is starting to get a bit low. All right, let's quickly go back to the market. Yeah, gold stocks at the moment, and this is physical gold, don't forget. When you're talking gold stocks, we've got to take into account the Aussie dollar. So I think gold in Aussie dollar terms is actually not going too bad. It's appreciating. So it's really gold stocks themselves. Let's have a quick view. Let's go here. I've got a little. All right, gold stocks. They've been, well, this one DCN's been hammered a bit, but really that it's coming down to a sort of a key level support down at that 180. It's had a good strong leg up. It's staggered at the highs, got belted once it got through $3.10 thereabouts. Been knocked down. That's on the back of some news too, I think. That's not looking the greatest at the moment. Still got some work to do before it holds. But I mean, if we get some high lows build and the market pushes up, especially in gold as well, we'll have to see how the Aussie gold goes in Aussie dollar terms. But we could see some buying coming there. Saracen, it's been grinding lower. There's no real. You can see that's coming off a big base, and we had a sharp move higher, so we're in the process of maybe correcting that move. Whether we're going to hold up down at sort of this 90 zone, who knows? We've got a level down there, but it's not a major level. We'll have to see how that plays out. Northern Star. So they're all looking at the moment a bit similar, contracting lower. And after these, that's St. Barbara had that good strong leg higher. We're just contracting. We're just in the midst of contracting, so we don't know where that's going to pull up and why. Oz Minerals, a different story on that one. It's going higher. It could be breaking out to the top side just at the moment. AQG, Alacia Gold, again. Well, it could potentially find support at this $2 zone, but yeah, if it washes that out, you'd want to look for, if you're going to, well, if you wanted to buy it, you wouldn't see failure down here and some higher lows build, but I wouldn't be either way, long or short, I wouldn't be going near that just at the moment. Evolution Mining, it's the same. So a lot of these are looking very similar charts. GOR. So I mean, if gold breaks down, depending on what the Aussie gold does in Aussie dollar terms, be interesting to see that play out. I can't get the currency. I can't get the currency swap. Sorry, the currency cross gold because you can get spot gold in terms of US, you can get it in terms of Aussie and Euro and things like that. But I haven't seen that. I can't get that up to have a view. So, all right, let's look at a few of these others. Oh, that's FTI. That's pretty much down on its knees on a weekly basis. We're FYI resources. So if we go on a monthly, it's right down on support down there. There's nothing really to say that we had that initial pop up. We're still holding lower highs at the moment. I'd just wouldn't even go near that one at the moment, to be honest. SXY. This is something that's not looking too bad. You can see this. It's still consolidating, sort of. It has been most of this year, say between 30 and 22 thereabouts. Um, that trend on the weekly basis is still lower. It's still held at 45. I mean, there's a lot of room to move if it pops up to 45. We've still got just a minor, well, it's a good support basis around that 10-cent mark. It's made that double bottom. It's popped out through this minor high at 21, 22. And then we've just been consolidating through there at the moment on a weekly basis. You can see supports holding around the 22, but we also got resistance around that 29. That could potentially be a lower high. So I'd want to see that broken up through 29 again, and then maybe a pullback, build another high low for a projection up and through 30, 33, and even targeting back up towards this sort of 40 to 45 zone. Yeah, so that's what I'm seeing on SXY, but we've got our eye on that for sure because this could really produce it. It could produce a long, strong leg up, but I haven't seen any technical entry points just at the moment. We're seeing some higher low. If this is a higher low holding, but that's not confirmed until we get a breakout to this top side. All right, so we better call it a day there. Thanks very much for joining us, guys. What we'll discuss tomorrow is more on the line. So we've discussed short selling, and just we'll talk about short squeezes, where the short sellers have been squeezed out of the market. It may look to roll over. You see some heavy selling coming, but really, for me, the technical setups are not there, and then they get squeezed to the top side. Just what we looked at, potentially what's happening in Maya at the moment. So we just had this good sell-off, come down to support, pop back up. A lot of sellers starting to jump in there, for whatever reason, I don't know, but maybe looking for this to be a lower high, looking to jump in here and looking for this to roll over like it has in the past, at least targeting $1, but they've just been squeezed out pretty much today. So we'll have a look at that. Maybe Qantas too. I think that's another one that I haven't quite looked at it, but we'll have a look at that maybe tomorrow. Yeah, Qantas. This is one that I have got mine. We've been short this, made a little gain, been long that, made a little loss, so we're pretty much neutral on that. But as a long trade, it'd be interesting to see. I think that's definitely got. I was looking at it somewhere around here as a potential long, but it wasn't a strong one. And then you've got this sort of a good move down, a good reaction, washed out some of these levels through 350, started rolling over, did get that big washout to 270, which we got stopped out of our short just prior to that, which was really nice. And then you've got that major rejection off there, and you can see that candle on a daily basis. It started and just went bang straight down and ended up quite strong. And then you got consolidation through there, 290 to 295, and we pushed up off that level. And then if you just took across the highs there, we just broke up. So it looks like this trending lower or this contraction lower starting to break. I'm more inclined to enter long here, but I just didn't really see the setup. So it'd be interesting to see how we go up through 350 or 360, because that potentially could be viewed as, I'd like to see a bit more contraction, obviously, because I think there's this move down is quite significant. I'd like to see a bit more contraction in price and some, daily higher lows, even a pullback, build another higher low, and then there could be an entry to go long. It'd be interesting anyway. All right, guys, thanks very much. We'll call it quits there, and we'll chat about shorting again tomorrow. We'll just follow on and talk more about short squeezes, and you can apply that to anything, but it's just something to look at and just like I guess not a scenario, but a concept to keep in the back of your head when you're looking at charts. And we talk out a lot about washouts and things like that. Washout as highs, it's sort of a minor. It's not really a short squeeze as such, but you know that when you look at something, whether it's a short has been stepping in it for quite a while, you know that sooner or later they're going to get squeezed out of the market. But we'll discuss that further tomorrow. But thank you very much for joining us. We'll chat to you then.